Hello, I'm Stephen from TEFAT, and today I'm going to be talking about bookkeeping for primary producers. Before I start, just in case I forget, I'll put a source of my TAFE textbook, TAFE New South Wales. It's P. McGrath and D. Royal Applications of Financial Accounting 1 and 2 Workbook, National Core Accounting Publications, 1996, Randwick. I will mention that at the end because I forgot to mention that in one and I had to subtitle that. But I'll just be getting keywords, and this was the resource that we had to purchase for TAFE. And I'm not going to just read out word from word for the book, just the keywords and concepts I've garnered, and these are general acceptable accounting principles as well. So I'll just put this in my own words, keep to academic protocols. The definition of a primary producer is someone or a company who uses natural resources of the land and the sea to produce commodities. Commodities being unfinished goods or natural resources that may be used to make finished goods later by manufacturers. So the farmer might sell the wheat, but the wheat is converted into a complex finished product, the processed food, and gluten removed, that sort of thing, the finished good. So the problems for the primary producer in economics, they're what's called price takers in perfect competition, and there's a lot of variability in seasonal factors, droughts, fires, floods, which can affect production, and sometimes things like crop failure have to be charged to the primary producer's profit and loss statement and charged as an expense. So a primary producer keeps diaries of their enterprises, for example livestock, including items such as purchases, sales, natural increase of the animals, deaths of the animals, which paddocks they're kept on. They would know what the information they want to keep to make their production techniques efficient. Also, if they're a wool producer, the shearing records, obviously number of sheep, counting the sheep, the type of flock, problems such as burrs in the wood, perhaps an estimation of micron count, and number of bales sold. So a primary producer, just as any other business or producer, has to keep sales journals, purchases journals, and in the old days of big properties isolated and only connected by horse and cart and roads that weren't really that good, the property was like a little village or community, and they would have to slaughter some animals for feed to feed the people working on it, the farm manager, the jackaroo, jellaroo, those sort of people. So you debit rations account and credit livestock working account. Livestock working account is reduced. Often these enterprises are summarised in a working account. That could be crop working account or livestock working account we mentioned. With crops, they're a bit different. There's two steps which I'll get to later. There's a growing account and a working account, but I'll get to that fairly soon. And so each enterprise has got a working account where you've got your debits and your credits, and I'll help you a little bit with the debits and credits. It's a podcast format, and I'm not going to be using the whiteboard. I find a podcast format rather suitable for this type of presentation. So, for example, a sheet working account, on the left-hand side, the debit side, you've got opening stock, purchases, natural increases, the profit and loss, and then on the credit side, your sales being a credit in the P&L, kind of decreases of the sheep numbers. Some of the sheep we use for rations, some died, unfortunately. So you get a closing balance. So that's a good example of a livestock account. Increases on the left-hand debit side and decreases, including sales, on the credit right-hand side of the livestock working account, namely sheep. So you might have average purchase price if the animals are priced differently, so the average cost of your inventory, so to speak. And you've got a wages ledger. All these, like any bookkeeping, summarised in general journal entries, general ledger entries with T-shaped ledgers. So you've got a wages ledger for the staff on the station. And some primary producers might be in the business of skins and hides, so costs are put on the left-hand debit side, being expenses, and sales on the right-hand credit side. Sales again being a credit item, a type of revenue, and so yeah, with cropping, crops which are harvested, there's such as cereal, barley, wheat, legumes. There's a twofold process. Firstly, you've got the growing account, which is a T-shaped ledger, and then later, once the crop's harvested, you've got a working account. And I'll just get to typical debits and credits in each account very soon. So with cropping, you need seeds, fertilizer, insecticides as your inputs, irrigation water, among other things. Perhaps chemicals to reduce fungicides, which can be a problem in wheat production. So with the growing wheat account, on the left-hand debit side, you've got expenses, seed, fertilizer, other crop expenses such as fungicide, I mentioned, harvesting expenses on the left-hand debit side, and that's not sales just yet. The right-hand credit side gets transferred to wheat working account, but that's favourable because that's going to be your sales eventually. So you might just treat it as pre-sales, wheat working, on the right-hand credit side, and finding your quantity of the crop and tonnage. Now, yeah, that's growing wheat, the type of crop, and wheat working is the next stage. So growing the wheat gets transferred from the growing wheat account and is labelled growing wheat on the left-hand debit side of the ledger, and the wheat sales are on the credit side, again sales being a credit item, a form of income. I sound like a broken record on that, but that's the difference between the growing... Oh, my picture's just gone out there. That's the difference between... Oh, by the way, that photo's in the Fitzroy Falls near Kangaroo Valley towards Mossvale. A very nice part of the state. The historic bridge at Kangaroo Valley from the late 19th century. Getting back to what I was talking about, so that clarifies the difference between growing the crop, T-shaped ledger, and wheat working, the crop working account, debits and credits in the T-shaped ledger. So just to summarise, growing wheat, all your expenses on the debit side, your income on the credit side, the wheat working account. The growing wheat gets transferred on the left-hand debit side. Wheat sales is posted to the credit side, as we mentioned, the type of income, credit. So they need financial reports, P&L, balance sheet, cash flow statement, just as other businesses, but we're focusing on the particular bookkeeping entry for primary producers, agriculturalists, graziers, farmers. So that sheep working account, opening on the left-hand debit side, opening stock, purchase and natural increase. On the right-hand side, things that reduce the sheep working account, sales, rations, deaths, and the closing balance of stock we mentioned. And so on the P&L, each enterprise is listed in revenue, and then general operating expenses are below total operating income, things that aren't attached to an individual enterprise, things such as rates, general repair and maintenance on machinery, wages, rations, bank interest. That's page 341 of McGrath and Royal. And your balance sheet, those livestock numbers are categorised as inventory, but your non-current assets are your land, your buildings, your plant and equipment. Your current liabilities, bank overdraft, creditors, non-current liability, mortgage, just as you'd see in other financial statements. I won't cover the cash flow statement. I have got another presentation on the cash flow statement if you need that in TEFAT. It's on the TEFAT website or Gumtree ad. So just having a look at that resource finally. Yeah, don't forget your diaries of your operating records. Oh, agistment is a term some of you might be familiar. It's when you put your livestock on someone else's land and you pay agistment fees. Quite common in the agricultural sector, and a loose association between primary producers who live side by side on the country road and or opposite. Really is a lovely environment to be in, farming, and nice sunsets, but very hard work. I actually, when I did my prac at uni, I studied 3/4 of an ag degree and I transferred, but I had a great time up at Walgett in the tall eucalyptus trees, flat land, mustering sheep with sheepdogs. The sheepdogs run back and forth. Great fun. The sorting the wool was hard work though, and in the shearing shed, throwing the wool out on the table like that Tom Roberts photo. So let's just know the definition of what a primary producer is. Know what affects agriculture that may not affect other businesses, such as seasonal factors and being a price taker in economics and perfect competition. Just get familiar with some practices like mulesing, slaughtering, branding, marking, weathers, use, the different terms, your shearing records, bales, type of wool, whether they've got burrs, quantities, descriptions, wool book, the class of the wool, weight of the wool, number of bales, date forwarded to an agent, also your sales journal, how much livestock was sold at the auction or the market or forwarded on to an agent, the buyer, the intermediary. Oh yes, I was just going to say livestock sales have been online for many years as well. And your wages book, like any other business, you know, things like birth of livestock, rations, slaughtering, the terms. So rations, debit rations, credit livestock, as we mentioned, and average costs for livestock purchases, if obviously they're not all bought at the same price. So finding up the total livestock purchases, dividing by the number to get an average. You may need that in the P&L. And if a crop fails because of variability, drought or something like that, or flood, you charge the crop failure to the P&L statement. So again, my source is P. McGrath and D. Royal, Applications of Financial Accounting 1 and 2 Workbook, National Core Accounting Publications, Sydney 96, just for main keywords and concepts in bookkeeping for primary producers. I really hope this helps. I've got an interest in agriculture as well. I studied it, met people, young people from the land, had fun, and with rugby and at uni and all that, it was quite a good time in my life, and seeing some interesting parts of the state as well. Other pracs too. I did citrus in Griffith. I did another property in the central west near Young, Renfrew. The Walgett one really stood out. I found that country majestic. It was settled in the 1890s, a bit later in the state's history, and the soil type is red, not as fertile soil as the Liverpool Plains, your black soils. And those areas have got interesting history of their development of the local communities there and regions and districts. And have a look at the history of agricultural settlements in the state, towns. It's always an interesting read. Again, I'm Stephen from TEFAT. I hope you found this interesting and useful. Bye for now.